Charts and options flowing high, stakes are rising, watch them fly. Natural gas, a wild ride, in the market we confide. Commodities, silver, gold, traders' dreams, tales we're told. Futures contracts never fold, in profits we behold. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick, every day, watch the numbers sway and sway. Brokers scream, they light the night, every tick a gamble right. In this game we found the light, trading life, our appetite. Buy low, sell high, money stacks, touch the sky. Market waves, we glide, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, where fortunes often collide. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, in trading we reside. Bulls and bears, we ride the tide. Candlesticks, can't hide. Gas and metal, side by side, where fortunes often collide. Leverage margins, risky play, day and night, no delay. Dip and tick, every day, watch the numbers sway and sway. Brokers scream, they light the night, every tick a gamble right. In this game we found the light, trading life, our appetite.
Good evening all, or good morning. Good evening all. All right, the sound seems to work. Welcome to the live stream. We start in 1 minute's time. There's a big sign on the front page of this chart in the middle here that says MPOX. We'll talk about that shortly. Otherwise, welcome to the stream. If you haven't liked and subscribed, now's a good time to do so. And we'll get straight into it. So welcome everyone. I'm going to go through stocks first of all, and I've got this thing written up here, MPOX, which I've sort of has burst onto the news scene in the last couple of days. Are they going to try and lock us down again? Who are they, and for what reason? Are the questions being asked? I don't know the answers to those, but it's certainly making its circulation around. Please type in the comments if you can hear me. If appreciate a yes or a Y, just to let me know that you can hear me. Before we go into these charts, and we'll start with stocks today, and then we'll go on to some of the others like Forex and natural gas and the energies and so on. But I want to put this up on the screen, and this is from Barron's, and I'm going to try and read it for you. But basically, it's saying we've got a very mixed bag of data coming through at the moment, and there's been a bit of optimism after that very sharp sell-off in the stock market. We got this incredible bounce back and rally, and this article sort of discusses a little bit about it. So I'm going to see if I can actually read it on the other screen, because when I'm streaming it. So basically, his markets have quickly forgotten jobs drama, jobs dropping off dramatically amid retail excitement. We had a fantastic retail sales number, and we've got the consumer confidence number coming up shortly as well today. But what this article goes on to say is the following. I'm just waiting for it to come up on the other screen because I can't read it yet. I probably can't read it here either. But basically, it's saying nothing like a rally to keep memories short. Investors seem to have forgotten anxieties from weeks ago when the poor jobs report came out, fears of recession, etc., etc. And then we got the CPI and PPI numbers. PPI actually slightly deflationary, and CPI pretty good. In fact, under 3% for the first time since all this drama began. And this report here goes on to say that we are seeing this tremendous rebound. We'll look at the charts shortly, but be cautious because this might just be a trap. So having said all of that, let's go back to the charts, and we'll come back to that article a little bit later on if we need to. But first of all, let's have a look at these stock charts. And the MPOX story might or might not dominate the scenes. I don't really know, but it's definitely cropping up very loudly on X, on YouTube, and in mainstream media too. These are our positions on NASDAQ and S&P. I'm going short, and I'll tell you why. Generally, I think, along with many others, and you've got to pick a side here, really. Do you believe that this market's going to carry on moving up and move to new highs, or have we seen the start of a bigger correction? I'm in the latter camp, in the corrective camp. I think we could get a bit lower on stocks and at least just be ranged until the end of the year. Before we look at the sort of individual names that I'm trading, let's have a look at the NASDAQ. Now, the NASDAQ has retraced back to its 50-day moving average. That's the red line here, the 50-period simple moving average. We did break up through this very sharp downward trend line, which is kind of a little bit too steep. So we hopefully will form a reversal somewhere up here. I'm going to put a Fibonacci number on here, a Fibonacci analysis, just to show you that we've also retraced back up to about 61.8% on the Fibonacci's. So that's the golden pocket. We've also got a previous swing high and a previous swing low going across to over here. In June, we had that as a swing low. And in August, beginning of this month, we had that as a swing high. We've retraced back to that. It's also exactly the 61.8% Fibonacci retracement number and the 50-period moving average. The 50 is the really key moving average on the day charts when you're looking at longer-term trends and swings. If you're a day trader, really, you should be looking at the 20-period simple moving average for your guidance in terms of short-term direction. But longer-term direction starts at the 50 and then moves on to the 100 and the 200. We're above the 200, we're above the 100, but we're holding at the 50 right now. That's where we've gone short. We've got a very small position short down here at around 19,000, and we've just put another small position short on here. We started shorting right at the top here originally. We've taken profits progressively on the way down. We've hedged occasionally in the mess in the middle here, and now we're looking to short this market for a move down to these recent lows at about 17,200 and below. The longer term target, that's where the 200-period moving average is, by the way, and the longer term target is, just checking to see if you can hear me. Thank you, everyone. Fantastic. Thanks, Abdullah. And yeah, no worries. The free memberships I gave out before this thing started, I only get 10 to give away a month, so I gave them away at the beginning of the session. If you've been following us quite regularly, you'll have been automatically allocated those free memberships. So that's the NASDAQ. Now, my target on this is actually back down into this green order block and possibly even much, much further, around about 14,000. And that would be a much more sensible, proper correction to this market. Now, that's a long way down, of course. And if we draw a line from the top to see how far that is from where we are, if we did get all the way down here, that would be a 30% correction, very similar to what we had on the last bear market correction or bear market. Once you get to 20% and beyond, it becomes a bear market, technically, for whatever reason. I don't know. It's just a nice number. Now, so maybe we'll get down there, but depends on how this economy plays out. There's all sorts of conflicting information: jobs, retail sales, inflation, the GDP, the M2 money number, the bonds market. Everything's all in a state of flux. And it normally is at turning points in the markets, which we seem to be at now. Not only is it a turning point in the market, but it's a turning point politically, not only in the US either, but in other countries like the UK, like in Europe, but various countries in Europe, South America, and here in South Africa as well. We've seen fairly dramatic political change. So we're seeing politics changing around the world, and also these markets incredibly overbought. We had the COVID distortion, created this bubble, created an inflationary bubble, which is now trying to reset. Do we need another COVID to reset this once again? be very careful of what might come out. I don't know if they'll get away with it again if they do want to lock us down. I was going to S&P very quickly. Let's have a look at it. It's a similar story, except we've retraced 78.6% on the S&P, very close to this recent all-time high. That is the 78.6, my favorite Fibonacci number. We've had really sort of green days or white days on my chart. We've had 1, 2, 3, 4, 5, 6. Today's number 7. Often 7, 9, 11, 13 are reversal days. Starting with day number 7, that's where we are today. And in fact, if you count this back to the recent dramatic spike low, and I wasn't sure we'd bounce up from there so dramatically, which we have. If we count it all the way back down to there, we've got 1, 2, 3, 4, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. This would be the 11th day. So yeah, so I'm hoping for a move down. Tiny position started off there, another small position, got plenty of room to add to this, but we will be looking to hedge if need be. We're not going to hold this against us for forever, of course. The good thing about holding short positions in the stock market, one of the small bonuses, I guess, for retail traders is that you get a nightly rollover. So your broker will probably pay you for holding short positions on NASDAQ and S&P. Now, going across to stocks, we can get rid of the big MPOX sign now. So let's hope that just doesn't happen, full stop. And that is just a whole lot of hot air about nothing. We're short on NVIDIA, 2 small positions starting there, and also this one up here. NVIDIA, generally, I think we could have a much better and bigger correction. We've only had a very, very, very tiny correction in the bigger scheme of this whole move up. We're getting a lot of thrashing around at these very high levels. We've moved into that order block. It's also a gap fill, also previous high. It's also a Fibonacci number. I'm not going to draw that on here for time's sake, but we've shorted there and we're short there. Got plenty of space to add on to this, really. But once again, like the NASDAQ and the S&P, I'm not going to hold on to this forever. If it just surges up, it makes new highs and keeps on going up. Same on Palantir. We're short kind of there. We haven't added any more on that just yet. I might hedge that. There are reasons why Palantir might be getting a little bit of a bump right now with what's going on in the Middle East and in Ukraine and Russia. Apple, we've also shorted at that level there. Apple, I think, is going to fiddle around for quite some time. I do believe there's an Apple iPhone 16 coming out in September, which is going to be a stopgap between the 15 and the 17. I don't think they quite got the collaboration with OpenAI going fast enough, and that might come in the next iteration of the phone. The phones still make up a big portion of the Apple product range, and any delays faffing around, like the iPhone 15 actually was a bit of a stopgap. Maybe the 16 will be too, and therefore I think Apple might faff around. It's also a bit overbought in the bigger context of the market. So, and with all the Magnificent 7 now starting to splutter and fail a bit, I think Apple might be among them. We've also retraced back up to this retracement level. We did break out through this short-term downward trend, but this is a previous swing high, and it's also a Fibonacci. It's 61.8% Fibonacci retracement number. We have nothing on Tesla, although generally I want to buy Tesla on dips, not just yet. I'm not too sure where that's going to go at the moment. Right now, that's all the stocks. Going across very quickly to currencies. We were long on the pound. We took some profit yesterday. It's carried on going up. Good on those who stayed in the pound long. I generally think that the dollar index is going to head lower over time. That'll push the euro and the pound up. We were looking at taking a long position on the euro at this breakout from here. We haven't done so yet. I'm going to wait to see how today plays out, being the end of the week. But I'm looking to generally get long on the euro as long as we're holding above this downward triangle, wedge, trend line pattern, whatever it is. It seems like we've taken the green path and not the red path. And if we are taking the green path, there's quite a long way we could go up on the euro against the US dollar. We've got a very long-term downward trend line, very messy. I haven't drawn this in particularly well because we haven't been anywhere near there recently. But if I just draw this trend line in, a little bit neater than we had, that would give us a target for the euro, and that could take us all the way back up to about 1.15. We're currently trading at just around about parity, 1.09. 1.09, almost 1.1 actually, not parity, 10% above parity. So target around about 1.15 maybe on the euro. And even if that did get going and we have a dramatic collapse in the dollar, I don't foresee that happening particularly. But if we did, we could go a lot higher on the euro, maybe up to 1.2. So that's the euro. We're not trading that just yet, but I'm looking to get into that maybe early next week. We got out of our pound long. We should have held on to that. Okay, we got a little bit out of that. We have nothing on the pound at the moment. And then the dollar yen, this is basically, we're still just selling into this rally after this big move down. I believe that the dollar yen is going to head a lot lower down into the 130s and maybe 120s. This is where we are. We actually just took a short position on this yesterday, right at the top at 149. We got up to about 149.30, I think, on the peak of that rally. And we're now back down below we were below 148 earlier today. So looking for this to move back down to these lows at about 142 and then carry on into the 130s. Eventually, that's a dollar yen. So we actually have a small position from slightly lower down, 147 something, 30 or 50, somewhere around there. And we've just added the next one on there. Still got plenty of room to add on this as well. Not much of a size, I think roughly half of what I want to get. So that's the currency scenario. Yeah, we'll look at wheat, Nicholas. Sure. We'll look at wheat for sure. We'll come to that shortly. I've got the wheat chart up here. Bitcoin and gold and silver and copper. So we don't have anything on silver or copper. We were long on silver from yesterday. I've just taken profit on that. Not yesterday, a couple of days ago, actually. So we got long there. We took profit on there. I'm not too sure which way this is going to go. It's hesitating a little bit, and we're already long on gold and Bitcoin. So perhaps if we get another little dip, maybe a retest, a double bottom around about the 200 moving average at about 26.2, 26. And if that failed, we could get all the way back down into maybe 25 or 24. 20. I think 26 is a good number. That's this previous low. It's also the 618 Fibonacci number and the 200 period moving average. However, I'm not saying we're going to get there. We might just carry on moving up from here. If we do, I'll consider adding my long position back on. In any case, nevertheless, that aside, I've got a long position on gold. Let's have a look at the day chart because we've left this entry position behind quite a long way, a bit behind us. There's our entry position on gold at about 24, just around about 2,400. We're at 2,472 right now and pushing up. What's interesting about this gold chart actually is we've got a potential triple top here. And I've spoken about this on gold and other instruments before, these and natural gas actually, these double and triple tops that gold and natural gas both like to make. But they're normally much more spread apart. Like that, for example, that double top, it's like, 12th of April and then again, 22nd of May. So about 6 weeks apart. And when you get double bottoms, we had one fairly recently down here, triple bottom actually, starting at the end of September. And the next one was the 4th of November. So again, about 6 weeks apart. These ones here that we're encountering right now today are very, very close to each other. One top, two top, three tops. And that's only sort of 18th of July, 14th of August. So it's about a month apart. Not too far off, I suppose. But I would imagine that I don't feel that this is going to reject like the other ones that are really sort of deliberately spaced. This is all very clustered into one go. It is a potential triple top. We did reject off from there on the last occasion 2 days ago, but it's pushing up. So we're holding on to that gold long position. Going to the 4-hour chart, you can see it looks pretty constructive. There's our entry position down there. A lot of thrashing around, a big range here, but generally forming higher lows. And although we're not getting higher highs yet, we are forming higher lows here on this 4-hour chart, as you can see. So there's a low, higher low, higher low, higher low, higher low, much higher low, this last one, and trying to push up into that zone above there. So we're long on gold and holding on to that. And then Bitcoin's super interesting. We're still long and we haven't adjusted our position at all. But if you remember, we have this day chart flag, bull flag on Bitcoin. This is at Coinbase on the day chart. We had that massive spike below where we got long right at the bottom there. That was our last long entry position. We have other long positions as well at the same time, but that was where we got into the last position. Some of them were up around about where we're at the moment. But look what happened. We spiked down through that flag on this longer term day chart, but on this short term flag, this is another flag within a flag. You can see we did exactly the same thing. We spiked through the bottom of the flag, bounced up and closed back within the flag. It's easier to see this on a 4-hour chart because it's quite a small pattern. But there you go. There's the breakdown through the bottom of the big flag that we saw a few days ago. Well, now going back to end of August, actually almost 2 months ago, a month ago. But when we zoom into this little flag, this little baby flag that we've got going here, we did exactly the same thing. Breakdown through the flag, not for very long. 4 hours later, we closed back above the flag bottom. So pretty much a repeat, the baby flag copying the daddy flag. And that's what we've got. So we're still long. I kind of like this. I think that's a rejection, a fake breakout of this little flag, a fake breakout of the big flag. My general theory and prognosis, and I need to drink some Coke, which I left in the other room, excuse me. My general theory and prognosis is that, or diagnosis, if you will, is that as long as we hold above 48,800 and something and some change, this last big massive spike low, we remain positive on Bitcoin, aiming for a target of about 100 and maybe slightly higher, 104. So if I take this back to the day chart on Bitcoin, you can see quite a long way for us to go up above there. And we haven't even got to our recent all-time highs just yet. So that's all the way up at about 73. And then all the way up from there, my target's into the 100 zone, something like that. All right. So, I found my Coke. I thought this was coffee. So, excuse me once again. So basically, I'm long on Bitcoin as long as we're below that big spike low a few days ago with the unwinding of the carry trade, market chaos. The VIX went to 60. Everything went berserk. And now we've just seen it again on this little smaller time frame bull flag. A little bit berserk yesterday, bounced back up through the flag, and we're all tickety-boo. So I'm happy with that one. And then silver, and we've talked about silver. Copper, I've got nothing on. For those of you trading copper, once again, we might just base around here. This is my original target. We've probably got some time to go faffing around in this zone until we get into the blob. And then let's see what happens. Failing that, we could get down into some of these green order blocks down here. That would be my preferred place to buy copper. Copper is very dependent on industry, electronics, electrics, and batteries and all sorts of things. So, you know, it depends on how all that goes with industry, and of course building is very important. We've got housing starts coming up, not housing, I think it's housing starts coming up in about 10 minutes, so that might affect the copper price too. Now going on to natural gas and energies. Before we do that, I want to do one quick thing and show you this page, and let's see. Yeah, that works quite well. So yeah, so while we're talking about stocks, these are the numbers that are coming out. And an interesting little thing that you can do. I got this from ChatGPT. Sometimes it's a real mission to go back through your economic calendar and go through all the news releases that came out during this week and last week, perhaps, and you're not too sure and you can't remember. There's a lot of it comes out, like today and yesterday, that, you know, probably 40 different economic data releases. You can go into, if you've got ChatGPT or the new Grok, if you're on X and you're a premium member, what do you have to be to get Grok? I just did this on ChatGPT. I said, just summarize really what went on in the economic data over the last week, 2 weeks actually. And here's a bit of a summary. Employment and labor market, we saw the employment numbers coming off. If we saw employment rate going up, we saw CPI coming down below 3. We saw PPI coming down below 1, core PPI. Consumer spending, retail sales was pretty strong. That boosted the market yesterday. And then we saw manufacturing and business service. Housing market coming up shortly. Housing starts will be important for things like copper and just generally for the economy. And then there's a couple of other things here. Implications for the economy. But what I wanted to read down is at the bottom here. Here are the rough percentages of natural gas usage in the state. Someone asked me about so what are the numbers that we should be looking at when we look at natural gas? Just want to give you an idea of the difference between gas and oil. And Brian from NG Rogue might be able to chip in. I think you're in the chat, Brian. But basically, electricity, it's difficult for me to read because of my screen here, but 38 to 40% of natural gas is used for electricity. 38 to 35% for industrial demand, residential heating and let's throw cooling into there as well, 15 to 20%, and then about 10 to 20% for LNG. So industry and heating and just generally electricity is the most important thing for natural gas. That's why we watch things like the weather, electrical demand, extreme weather events going on, the temperature, and how much wind there is about, for example, which might add extra wind generated solar energy, and also heating, sunny days for solar. So all of these things go into the equation, but there's an awful lot of natural gas used for electricity and industry. When industry starts petering off and demand for electricity, not only for heating and cooling, but for industrial demand for generating electricity in general, just your power plants, when that drops off, natural gas can see a decline. And then there's another little slide here. We're just looking at oil. I just want to give you some context on this. When it comes to oil, most of it is used in transport, not only in motor vehicles, but in aeroplanes, cruise ships, tankers, cargo ships, etc. Huge amounts used in just oil. A lot of oil is used to transport oil as well. The ships that transport oil use a lot of oil themselves. So oil is primarily driven by demand for transport, and basically you can think of things like transporting goods and goods around the world, transporting energy products around the world, transporting people around the world for holidays and for business and that sort of thing. So two different demands for these two different things. Bear that in mind when we're looking at what we're trading, because I'm short on crude oil but long on natural gas. And of course, we look at storage as well. How much is in storage? How much has been produced? Awful number of variables that go into all of this. So having said all that, let's go back to the screen and look at the energies over here and see what we've got going. Let's start with, before I get onto natural gas, because that could take a little bit longer, let's start with URA and UEC. We talked about this in our live trading group yesterday. Perhaps I've mentioned it elsewhere as well. But we have a long position, two long positions on URA right now, one from around about 26 and one right from the bottom here at 23. We're kind of, I suppose, break even overall on URA. And I'm looking for this to move back into this channel and then start to move higher again once we've established a base. I think this is looking pretty constructive. We've got a little bit of a gap and the 20-period moving average above us here on this day chart on URA. If we can push through there, get up to the channel, and then into these moving averages and this order block. Generally, I'm positive on uranium in overall. My prognosis and theory, which you should have for every instrument that you're trading. Why are you trading something long? Why are you trading it short? I think demand for uranium is going to be ongoing and increasing, and it's going to be an increasingly more important source of energy for the world as we move away from burning fossil fuels. That's inevitably going to happen. And it's not just going to be towards wind and solar and electric and all that sort of thing. I think uranium, or at least nuclear products, are going to be really important. On UEC, we have actually bounced back up to the underside of this channel already. There are long positions, one from around about 530 and one from around about 430. And at the 200-period moving average. That was the channel bottom that I said we would probably break through, stop out some of these bulls, this bull flag failing down to the downside, but only into pretty good support down below us. If you look at this UEC chart, we fell right to the top of this consolidation zone that we broke out from originally. We've just bounced off there and trying to move up. So long on that and long on URA, and generally I'm pretty positive on uranium products. These could go an awful lot higher. But these aren't going to be super quick, super fast, exciting sorts of trades. These are the sorts of trades where you try to buy dips, get out in rallies, buy dips, get out in rallies, and so on. And then before we get to natural gas, Brent crude, you'll be probably following me on X and on YouTube. We've got positions on Brent crude that we've taken variously from these three red arrows, and our last one was up here at just about $80 to the barrel. We're now down at 76 something, and I think oil is going to carry on moving down. My theory on oil is that oil prices will reach down into the 60s, 50s, and maybe even 40s in time to come. I think demand for oil is gradually waning and depleting, and I think that the US is going to be producing more of its own oil. There are more and more electric cars on the road. There could be an economic downturn coming up shortly, so industrial demand might drop off, and so might transport demand for its own products, energy products, oil and gas around the world, LNG, crude oil, and also for cruise ships and airlines and that sort of thing. I think if we do see a bit of a downturn, those will drop off. Long term, however, I think oil it's still very expensive. It's still around about $80 a barrel, and I think that needs to normalize. And I think all the fundamental pressures are there to help us get going to the downside. If you look at Brent crude oil, alongside that, it's always good to look at Brent crude to give you a clue. I thought we could get up there into that big blob. We didn't. We turned around along with WTI at the 200 and the 50 period moving averages on Brent crude. This is the day chart, and the same sort of thing here. I think we could break down below this range. Okay, I don't have enough space on here to see it all. Down below the sort of 70, 71 level and down into much lower levels on Brent crude. Of course, WTI might fall off a bit quicker, given that it's the Texas intermediary price. Right, now let's have a look at natural gas. Before we go to the 4-hour chart, let's have a look at this day chart. And you'll be very familiar with this now because it hasn't changed. There's our triple bottom that I've been trading off as a general idea. As long as we hold above that triple bottom, and that the low on that is actually at 1.52. So as long as we hold that triple bottom, I'm long on natural gas in my thoughts and my strategy until we get back to $3 and then possibly $3.40, 50, 60, or 75, which I've been saying for some time now. Mostly we've been trading for the last year and a half since we've been trading this together. I suppose we've been trading within that $2 to $3.60, 70 range, and we're still in that range. So that remains my target. The top of that range is about $3.50, 60, maybe 75. And the bottom of this range at its extreme, where this triple bottom is at $1.50. We're holding above $2, below $2, the bargain store exit into the dollar store. We're still in the bargain basement around about $2, $2.16. And this is the chart pattern. We held above this rollover gap, the squiggly line that I drew on, bounced beautifully off that squiggly line perfectly, just by pure luck. Bounced off that bit and then went a little higher, bounced off that little bit there. But we're holding above there. We broke out through these two downward sloping trend lines, this purple one and this black one, and we've held above there beautifully. Now we've got a ledge just beneath us at $2.13 or 12. That's where we are trying to hold at the moment. Now let's have a look at it on the 4-hour chart. And bear in mind, this is the spot price over at Pepperstone, so it's slightly different, but it gives you the same idea. There's the ledge. I'll move this blob down to that ledge. And that's at on the spot price actually at $2.11, as low as $2.10, somewhere around there on the spot price at Pepperstone. All of you trading natural gas at your own brokers, whether you're trading the futures, I trade both the futures and the spot price. Futures I trade at Black Bull. If you'd like to trade futures at Black Bull, there's a link below this video. You can get your Black Bull trading account up and running there using that link, and they'll also give you free trading view charts, the same charts that I'm using here. But whether you're trading futures at Black Bull or any other broker, or a spot price at your broker, whether it's, for example, Pepperstone or Oanda or Capital or any of those, you'll have a slightly different price to mine because they calculate their price based on different parameters. For example, at Pepperstone or at Oanda, it's the front month and the spot price and one future month, or maybe two future months. It's difficult to tell exactly what they are using to calculate it, but they're all slightly different. Over here at Pepperstone, it's currently at 214, and on the 200 period moving average on this 4-hour chart. It's also with a 50 period moving averages on this 4-hour chart. So they're in confluence together here. Also, there's that swing low that we were talking about and that green band. That's a pretty key and important number on this spot price over at Pepperstone. So that's the level there. It's also where the 200 and the 50 period moving averages are. And it's also where this previous swing low was. I'd hazard a guess. I'm not going to draw it in, but it's probably the 38% Fibonacci retracement as well. But yeah, it is exactly that. So it's also the 38.2% Fibonacci retracement. I'll leave that in there just for reference. So it's all happening at that $2.12 to $2.10 price on the spot price. So that's where we are. Still long on natural gas. I'm holding for the excuse me, $3 level thereabouts, and perhaps higher, $3.40, 40, 50, 60, or 75. I don't know how today's going to play out. We're going to be watching this. I'm a little surprised it sold off so sharply yesterday from that high at $2.25. But the fact is, until we close above this red line on the day chart, we are not yet totally bullish. We've got to close above that level there. I've said it to a few people who have asked me, including someone who's got a big position on this. There's a big gap over here as well on the left, if you remember. The red line goes straight through the middle of it. That line there is the one that we've got to hold above on a daily basis. We've got to close above there. That's 2.25 or 2.26 on the spot price over here at Pepperstone. We've got to close above there on a daily basis to keep this to sort of propel it to the next bullish phase. Now, if we look at this on the NYMEX, at the Henry Hub price at the NYMEX, and have a look at that line over there, I've got the same line. It's a different price because this is the futures, but the same line or same pattern is being shown. So there it is, 2.27 on the futures at the NYMEX, the Henry Hub futures. That's the line on that, the sort of line in the sand that's separating us from the next bullish phase. Only on a daily close above that level will I feel confident that this is going to be moving higher up towards the $3 level. We have not got that yet. Maybe we'll get that today. Maybe we'll get that on a rollover this weekend. We'll have to wait and see. It's all up for grabs right now still. So that's that. And then one final chart. Actually, there are two charts. We're going to talk about wheat, as someone has just reminded me. And then I'll go through the questions at the end. So a couple of things here. We're short on the dollar, South African rand, and that's working out beautifully. Again, if you've been following me, I don't know why that's there. I just put that in there by mistake. If you've been following this, let's put this on a weekly chart. It's easier to see. So we've got two channels here, one very long-term rising green channel, whoops, and we've got this much shorter-term rising red channel. This is the dollar South African rand on the weekly chart, and we're short from the two red arrows on here. That's moving down, and only once we break and close beneath this red channel on a daily and also on a weekly basis will I be confident that we'll carry on moving down. My target for the dollar against the South African rand is around about 16 rands to the dollar. Switching this back to the day chart, you can see we have now actually for the first time broken down and closed. Well, we haven't closed. This day is still open, of course, but if it does, we'll have then closed beneath the red line that forms the bottom of this rising channel. We're now at $17.92, and that's looking pretty good. So short on the dollar South African rand, and that's also short on the pound South African rand. The other one that we're in on this chart is TLT. We're long. We've spoken about this before. We got long right here, the green arrow at around about 95 and something. And excuse me, we're currently trading in pre-market at 97.50. So I'm looking for this to move up. I've got a squiggly line drawn in here. Let's see if we can get that drawn in there. So this is my idea on TLT. It's just an idea. It's not cast in stone, concrete. It's not guaranteed. It's not a prediction. It's what I think might happen, and it's what I'm planning on happening unless anything obvious changes. If something completely changes, then I'll change my mind and change my trade and change my strategy. But for now, long on TLT for a move up into quite high levels, up to around about 120, and then maybe even higher, up to about 140. So that's TLT looking good. No reason to make any adjustments to that either. And then VIX, well, it doesn't. Well, there's the VIX spiking up to about 60. The last time it happened was in 2020 during COVID. Well, 2020 was a bit more impressive. The time before that was 2018, and the time before that was 2015. So we did certainly get that. Pretty impressive, but these don't happen twice in a row very often, as you can see. Once we've got up to the top and come back down as quickly as we did, we don't see that moving up again very rapidly. So, and this one came down particularly quickly, faster than all the others. Where is it? There we go. Look how fast that one came down. So yeah, you might look to buy the VIX into these moving averages for a bit of a bounce. Probably will bounce. It's not a play that I'm particularly interested in. We did get long in the VIX right down here in the 12s, but we didn't get all the profit on that way. I mean, who could have predicted that huge move up? So we only got about, I suppose, a third of that at best. Maybe maybe slightly more, but about a third of that move we caught. But a third's good on a big, huge move on the VIX like that. Right, now going across to commodities. Someone said, let's talk about wheat. Not a lot very interesting going on in commodities at all in general. We're long on wheat. That's the pattern. Long downward trend, breakout, collapse back down to the trend line, and we got long. Classic breakout, pullback, and it's not looking particularly exciting. We're probably in about 0.02% negative on this trade. Call it break even, thereabouts. And seeing as we got into this trade about a month ago, it's not very exciting. But we are long on sugar too. Same thing here. These are all the commodities. We've got 2 long positions on sugar. That seems to be holding up okay. Same sort of thing, big move down. However, if we hold here, it'll be, well, put it this way, we could go a lot lower on sugar. And sugar often trades in cahoots with oil. When the oil price goes up, sugar goes up. When the oil price goes down, sugar goes down, because sugar products are used to propel vehicles and provide energy. And ethanol, methanol, I can't remember which one you get from sugar. I think it's methanol. You know, if the price of petrol goes up, sugar sometimes goes up as well because of the demand for methanol. Or is it ethanol? I can never remember. So that's wheat and sugar. So we're long on both of those. Those are still open, unhedged. We're also long soybeans. This is also just a fresh position that I opened right at the bottom here. I put a chart up on X. You can have a look at that. Also in my private group. But basically, we've come down hard on a big support level. I don't have that drawn here on this chart. I've got it on my other chart. So we're long on those sugar, wheat, and soybeans. But we're also in corn and cotton, and we're hedged on those. Looking for a long position. It failed, and I just immediately hedged corn, hedged cotton. Well, I'm going to wait to see what happens with those. And then orange juice and cocoa and coffee, the luxury items, I suppose, when it comes to breakfast foods and things like that. Orange juice is what I'm looking for. Actually, we got quite a nice rally on orange juice and back up into this zone here. We might just turn around here, but I'm hoping for a move up to the 78.6 and a complete gap close of this big gap down here. So if we get up to about 475 and maybe 480 on orange juice, I'll be looking to sell that, but not just yet. And then same thing on coffee. Looking for rallies to sell into, but it's been going sideways pretty much. I had an opportunity to short, which I didn't take, but it wouldn't have gone very far in any case. And then cocoa, for those of you who are trading cocoa, I continue to look for this, but we might not get it. It's looking very heavy on this trend line underneath us, and it's already pierced it a few times. So cocoa might just collapse down through this level where it is now at about 8,400, 8,300 or so. But if we can get something like this going, if we sort of rally back up to the top of this downward sloping trend line, then I'll have a go at cocoa. We've only had 2 touches on this top line. We've had 3 multiple touches on the bottom line, only 2 on the top line. And normally you'd see a 3rd touch at least. So perhaps we can get something like this. Let's just drag this along a little bit. Perhaps we can get something like that. Just another touch, maybe 2 more touches on that top line before cocoa starts moving down. But I'm in no rush to get into either of those, cocoa or coffee, or orange juice, until we see some of those preconditions being met. Okay, and I think that's it, folks. I'm going to go through some of the questions now and comments, and let's see if there's yeah, it's a pleasure. All of you who, yeah, so as I just put out these gifts before the session started. So if you've got one, well done. And I think you didn't even have to be in here to get your gift. So, so welcome to all of you. Welcome to Ashutosh. Nice to have you here. And Nicholas Letourneau. Yeah, we looked at wheat. Anything else you want to know on wheat, Nicholas, just let me know. Good day, Eva. Nice to see you. Eva Zhang, lovely to have you here with us. And oh, that's yeah. So Streamlabs just reminded you there's a list below. There's a link below this video. If you'd like to get on the early bird list for the course, the swing trading course, which starts in well, about 2 weeks now, maybe 3, but certainly the first week of September. Hopefully not the second, but it might just be the beginning of the second week. But in that time period, we're starting the course. If you want to get on the early bird list, there is a link below this video just to get on there. Ciao, Matteo. Nice to have you. Always nice to have you, Matteo. Gabriel, what happened to oil today? Yeah, so I'm pleased it went down, Gabriel. We're short on the oil. I've given you the reasons. I think really the demand for oil and the current pricing for oil is unsustainable. And I think the market's starting to price in the fact that we might get cheaper oil from the US and that we might see a recessionary drop in the price in oil as time goes on over the next few months. Number one consumer of oil in the world, US military. Yeah, I'm sure. Yeah. So there you go. Not only consumer, but also promulgator of demand for other reasons, I suppose. Yeah. And the world's largest emitter of pollution. Yeah. All right, Mario, question is, what's happening with cocoa? My roller is around 7,000. On most platforms, it shows 8,500. I don't know, Mario. You'll have to ask your broker. I don't really know what's going on. But yeah, it's a difficult one to trade. Many brokers seem to get very messy with cocoa prices, particularly when this instrument becomes illiquid due to market manipulation by the powers that be in certain places, particularly in West Africa. Liquidity gets difficult. Brokers find it difficult to get the liquidity they need to supply the clients who are trading with them with the volumes they need. And sometimes their pricing just goes haywire. I experienced it during that last big surge. What about natural gas companies? Local Guide. Thanks for your question, Local Guide. Natural gas companies, Woodside Energy in Australia, WDS, ASX bullish. Yeah, I haven't had a look at the ASX Local Guide. And I haven't been following Woodside Energy. I tend to trade US stocks, CFDs, equities, that sort of thing. And I'm a bit of a maximalist, I suppose, when it comes to trading instruments. I prefer to trade oil futures or spot, and natural gas futures or spot. I prefer to trade gold rather than gold miners and gold companies. I prefer to trade Bitcoin rather than Ethereum and Doge and whatever. I prefer to trade the NASDAQ and the S&P to Apple and Tesla, although I do trade those. So I try to stick with the simple things. I've got enough instruments that I trade already, about, I don't know, 40 or so that I trade actively. So I can't really add more onto that, but we can have a look at that sometime, sure. But perhaps not today. We're sort of running out of time. The market will be opening up in about half an hour, 45 minutes. Ethanol, thanks, NK. Ethanol, not methanol. Also known as biodiesel. Yeah, so it's ethanol. I think they can actually make methanol from sugar as well, but I think ethanol is the main one. Quite right. Thank you very much. Yeah, ethanol from sugar and corn. There's not a big difference in chemical formula between ethanol and methanol. In my previous days, I used to be a scientist in the chemistry field. That was my field. Not a big difference, but different characteristics. This time of the year normally bottoms in wheat. Yeah, I think most of these, Nicholas, I think most of these kind of, it's time for them to be sort of bottoming. So we've got wheat, soya, perhaps cotton, and corn, probably all looking to bottom about this time of the year, some of those. Yeah, I mean, I know I actually personally know some sugar farmers and some cotton farmers, and these low prices are not what they're currently looking for. So it's putting a big squeeze on some of the farmers, unfortunately, at these prices. Lynn, excited to hear about Bitcoin since it just hit low 56K levels. Yeah, let's have a look at Bitcoin. Yeah, so we talked about Bitcoin earlier, Lynn, and yeah, we got down to that, not quite 56,170, but almost. But I think this pattern's quite constructive, and I don't know how you feel. I'm not a huge Bitcoin trader, although it's a really important part of what I do these days. I trade quite a lot of Bitcoin. but I trade lots of other things as well. So I'm not one of these people on the internet that goes on and on and on about Bitcoin and patterns and cycles and hodling and toddling. I don't do any of that. It's just another instrument to me. And I think Bitcoin is beginning to trade much more technically than it has in the past. And so we can start to apply some of these chart patterns and ideas that we would normally apply to bigger instruments with bigger market cap and which behave more technically and more sensibly along the lines of TA that we're kind of used to, with less erratic spikes, less dramatic moves and volumes. We're still getting that for sure. We saw that just a few days ago, and perhaps even within these little moves that we're seeing at the moment. But it's becoming more, I think, easier to trade and more along the lines of what we expect from most technical analysis. So with that in mind, having said that, I like the way this is looking, unless it does something completely different. And the fact that we are moving into gold, metals are improving, silver, not as much as gold, perhaps. Copper's lagging a bit. I haven't looked at palladium and platinum and those metals today yet. But everything on the metal front's looking on the up and up. And like it or not, whether you believe it or not, Bitcoin is being increasingly labeled as the digital gold and is trading more along the lines of gold than it has in the past. Quite often it's been aligned with the stock markets and not so much gold, but they seem to be trading a little bit more in tandem these days. Gold is surging higher as we speak, which I'm pleased about, of course. All right. I think that's it, folks. Well, have a fantastic trading day. I don't know if there's anything else to talk about. I think we've covered everything. And yeah, just to remind you, if you haven't subscribed to this channel, that would be great. It really helps the channel sort of produce more stuff, helps me get excited and keep doing things. And make sure you hit the notification bell as well. That's the bell-shaped thing next to the subscribe button. And if you haven't subscribed and signed up to the early bird list, down below there's a link for the Swing Trading Blueprint course releasing the first week of September. All right. That's a pleasure, Lynn. Yeah, so I think we've covered all the questions. There were a couple earlier ones, I think. No, I think that's all. Okay, folks, have a great trading day. I will see you a little bit later on. I'm planning to do, probably on Sunday. In fact, I'm going to do a proper video on all the instruments on Sunday. And we'll probably have a little bit of, maybe we'll have a live stream just before natural gas opens up on Sunday as well. Pretty excited about it gapping higher. It gapped higher last weekend, so perhaps it'll gap higher this weekend. We'll have to wait and see. 2 weekend gaps up in a row would be fantastic. And I'm aiming for that $3 level and then 340, 50 or 60 and 75 on natural gas. And I will speak to you when I see you next.